Hello Market Club members, Adam Hewison here, coming to you from the digital studios of Market Club. And I wanted to share with you an observation I made on the S&P 500. It's very similar to the Dow, but what it is, it's interesting because every time we have had a monthly signal, it would appear, it occurred back here in 2014, it occurred here later on, and it's occurred here. Every time we've had that, we've had a pretty vigorous bounce. However, there's a difference this time, and here's what I think it is. Previously, we did not have this huge top. This is a very, very big resistance level. We did not make a new high when we had the bounce here. It failed. We are, in my opinion, making a major turn. I think we had a 6-year cyclic high last year, and I think that's where we're going to be for the next 12 months. I think that's going to stay in place. I think we'll see more of a defensive nature. This is the key level to watch right here. If we go below these levels right here, that would be very, very negative for this market. It would lead, this would be a complete top then, and you could look for this market to go considerably lower. Certainly from, let's say, this area, the 1900 level to the 2150 level, that's a considerable move. So I think that's what we have to watch very carefully. We're very oversold, as you can see, so I would not be surprised to see some sort of a bounce from here. But all of our trade triangles right here are all negative. That's a big deal. Next market we're looking at is gold, and gold has been a little bit kind of trying to make a base. It's got back down to support right here. You can see that, but let's scope this in just a little bit further. Let's just do the last 6 months. Noticed here is if we take a trend line and just draw it from these levels right across, you can see when the market basically had a resistance zone right here. This is back in the July period, and when it first rallied up, that's what stopped the market right here. So this was resistance, and this was what stopped the market here. Now this should be support, as we've clearly broken over this line. And so we're back down to support. We're getting very close to the 50 line in the RSI, which is also support. I think this is probably a very low risk buying opportunity. Our weekly is positive, and that's a good sign for this market. I think the red, we may have had a red daily. Let's take a check on that. Yeah, so we've had a red daily, meaning you should probably be just on the sidelines waiting to get a green daily to be a buyer of gold. Next market we're looking at is the Dow, and you can see we are in, it's the only one that hasn't given us a red trade triangle. You can see if we scope this out a little further, let's say 1 year, you can see the monthly was here, then we kicked in a monthly here, so we're still in that zone. We haven't broken down and given a sell signal yet, but we're right at support. I'd expect we see some sort of a rally from these levels. This is what I was telling you about how important signals are. This is GoPro. As you know, they had terrible guidance. They really haven't done what they said they're going to do. They've become a media company, and you can see we had a signal right here to be a major seller of this market, and it's exactly what has happened. We've seen the market come down dramatically, and they've also, if you put our weeklies in there, you can see here 812, it's just not good. And you can see it just really just zipped down, and our last signal we had was just here 111 3 days ago, and that was an indication to get short this market, and of course it fell down again, but the overriding trend has been down, and that's why the trade triangles are important. They're not right every time. No system is right every time. But if you can get in the 70 to 80 percentile, you're doing extremely well. This is the Nasdaq. You can see there again we've hit some low points on the weeklies, and they've tended to be a bounce from those levels. I would not be surprised to see that happen. The market's heavily, heavily oversold now. A lot of liquidation. Still a lot of uncertainty in the market, so be careful. Don't push the envelope on the downside right now, but don't get aggressively bullish right at this moment. This is crude oil. We were looking for the target market to go down to about 28 to 30. We got, if we close this in further, you can see we got very close to 30. I still think we'll probably break 30, but we'll have to see. But the key thing is here is just let the market do what it wants to do. You can see our last signal here came in right around these levels, right around the 45 level. In fact, I put our trade triangles in, you'll see 45, 84 was the signal. and the trend is still clearly down in this market. This is Best Buy. We had a signal just before, that was today on this market, indicating to get short. 28 was the signal, 28.64. It's currently trading at 25.64, but you can see if we scope this out, we've talked about the brick and mortar stores, and here's the signal is back here at 36. There was a buy here at 31. So again, this is not doing particularly well, and I think that's the key thing to remember. We've had some nice trades in Best Buy, but I think the brick and mortar stores are going to have a hard time. If they didn't do well in the fourth quarter, then they're not going to do well for the rest of the year, in my opinion. This is Barrick Gold, pretty much the same picture as we talked about in the gold market. It's coming back down to support. It's just dipped below the 50 line. However, the day isn't over with yet. We may see it come back up, but I would be more inclined to be a buyer than a seller right here on this market. Only thing is down, the daily is down, but the weekly and the monthly are up. All positive signs longer term for this market. In case you have noticed, we are trading or looking at our new charts, which we're very proud of, and you can do, obviously, this is a line chart. You can do a candlestick chart. You can do a classic Western line chart. You have your studies. You have trend lines. You have Fibonacci. You can zoom in if you want to. Very simple. And zoom out. It's all here. Then you have the studies on this side. If you want to put a simple moving average in here, just click once. It shows you the moving averages, all in very distinct colors, which we wanted to show you. And if you want to close that or change it, you can just do this and just click here, and it takes them off. Very simple. Then we have the exponential moving averages, the Bollinger Bands. Click that. You can see how they work. And we also have about how to use them, and we'll also have special videos on that. And also we have standard deviation, linear regression, and Donchian channels. So again, these are all things that we have for you now. Hey, I'm Adam Hewison. Thanks for stopping by. Every success. Be disciplined. Be careful. These markets can be very choppy and very volatile. I'll see you tomorrow with a weekend wrap.